Hey, what's up traders? It's Cypher Trade. Today we're going to be talking about supply and demand. If you have heard the word supply and demand thrown around in the trading, but you're not really sure what they mean or how to use them, this video is for you. By the end of this video, you will know exactly what a supply and demand zones are, how to find strong ones, and how to actually trade using them. Let's keep it simple and let's get into it. What is a supply and a demand? Let's start with the basics. A supply zone is an area where a lot of people were selling and the price drops fast. A demand zone is where a lot of people were buying and the price shoots up. What we're doing is trying to find these areas on the chart where price moves aggressively that shows strong interest, and it can be a great place to look for a trade. Alright, say for example we're looking at the chart, and here's a quick example of how it would look like. So right here on top, right here, you can see that we have sellers just sitting here waiting to sell. That is where your supply zone would be. And right here, down here, you can see the buyers are sitting right there. That is a demand zone. Now let's go and see it on a chart. Alright, so here I am on the Nasdaq, so I'm on MNQ. I am on the 4 hour because the price action has not been the greatest. So to find a clean setup to show you guys, I would have to look at the 4 hour. So for example, right here, you can spot a supply zone right there, and this is how I would mark my supplies and my demand zone. So I would look at the bullish candle before the strong move to the downside. So this is what we're talking about. This is the strong wick to the bottom side, and this is where I mark my demand zone. And you can see here, for example, you can see here to know that this supply is a good supply. You will see when we trace back up to it, price starts to slow down. We can expect to see a rejection, and you basically will enter in right there, putting a stop loss above this zone, targeting a 1 to 2 or 1 to 3 or whatever you're comfortable with, and boom, it's as easy as that. And for a demand zone, it's the same thing right here. You can see a bearish candle before the strong move up, mark that right there, wait for a retracement in it. You can see on the low time frame that the price starts slowing down, getting to that zone, and then you expect a rejection right there. You take an entry with a stop loss under that zone, targeting 1 to 2, 1 to 3, whatever you're comfortable with, and boom, voila. That is as simple as that. Not every zone is good enough though. So here's how you know if the zone is strong. 1. The move away from it was fast and clean. 2. Candles are big, showing momentum. 3. It hasn't been revisited yet. 4. It's clear turning point on the chart, like the high or the low of the move. 5. There is space around it, no other zones right next to it. Alright, so how do you actually trade using these zones? Here's a simple process you can follow. Mark the zone on the chart after the big move. Wait for the price to come back to that zone. When it gets close, look for a sign of hesitation, like a price slowing down or getting rejected. Then enter your trade. You can set your stop loss just outside the zone. Aim for a reward that is at least twice as big as your risk. Don't rush. Let the price come to you and react. Patience is key. So that's the basic behind supply and demand trading. You're just finding areas where the market made a strong move and using these areas to plan your entries. If you keep trading clean and simple, no fancy indicators, no crazy tools, just price and logic, it would help you a lot. If this helped you, make sure to hit the like button, drop a comment, let me know if you want to see videos where I break down real trades using supply and demand step by step. Subscribe if you're trying to level up your trading, and I'll catch you guys on the next one. Peace out.